And first off, I watch these Coinbase commercials, and I'm just scratching my head because they just got cyber attacked. Um, welcome back to
That's
the show,
funny.
Fred.
Hey, great to be with you again. I'll tell you a funny story about, I'm pretty sure it's Coinbase. Okay, so for some weird reason, one of our phone numbers must be very close to one of theirs.
Uh
And about once a week, I get calls from people, and it's probably like 3, 4 times a week. So, almost once a day on average now, from somebody who's having trouble getting into their Coinbase account.
oh
They
no.
call up complaining, I can't get my account, or this money is missing, and I try to transfer, and this is wrong, and that's wrong. And they start yelling and complaining. I'm like, wait a minute, you've got the wrong company. We are not Coinbase. And considering the fact that I'm just getting a few of these rollover calls by accident from people, apparently misdialing, I can't imagine how many of these actual calls the company must be getting. So there's something going on there.
I mean, 400 million, they said, is got cyber attacked on. I mean, see, this is the thing, folks. You have to understand. When I look at a commercial like Coinbase, when they sit there, the future of money, and I'm going, really? Come on. You see, they try to make it convenient, but see, people are so fixated on the almighty dollar, and it's fiat. The dollar bill is fiat currency, and people still put their full faith and credit behind it. When, Fred has been out there trying to educate the public about, what we're doing that's constitutional, and that means the coin, gold and silver coins. And that's why I'm Fred of the show, because that's where I get all my gold and silver from, is Fred Dashevsky at uscoincapital.com. So, Fred, where's spot prices now, and what's happening with gold and silver?
Well, gold's steadily in the $3,200 range. We've seen it just slightly higher, approaching 34 and change. Silver running around $32. So we're still roughly 100 to 1 on that gold to silver ratio, which has been interesting. So the dollar had begun to strengthen, which usually depresses the price of gold, of course, until recently. And then, Moody's came out with this downgrade of the U.S. dollar, which, I find this kind of interesting. Between Standard & Poor's and Fitch and Moody's, they represent, the relative concept of determining how the U.S. dollar looks. And when the credit rating agencies begin to downgrade a currency for a nation, it is a pretty soft indicator that there's weakness. And what they're complaining about and what their concern seems to be is this massive growing amount of deficit spending, to the point where they don't believe that the interest is going to be as sustainable in our ability to sell debt if we continue to add more to our deficit spending. We are pushing 13% of GDP, which is substantially higher than it was even a year ago. And they're estimating within the next 10 years, 134% of the GDP is going to have to go to pay the debt or interest on the deficits. We've now surpassed the point where interest on the debt is larger than the Department of Defense's entire budget. So Moody's has a problem with what's happening with the U.S. dollar. This is going to affect a lot of things for the U.S. economy, but it certainly will take the punch bowl away from the rally in the stock market if the U.S. dollar begins to fade around the world and people start losing confidence in our wonderful fiat system.
This coming from Moody's, Fitches, and Standard & Poor's, the people you love when you were out there buying all those AAA rated bonds before the big 2008 crash, and Moody's, Fitches, and Standard & Poor's were all rating all this stuff AAA that it was nothing but junk. And I'm supposed to trust their opinion when they try to downgrade. I mean, to me, the U.S. dollar's been on a downslide ever since this nonsense happened. And now we've got where's the ceiling at, and where is our debt service at?
Well, the problem becomes that, although we can laugh about the ridiculousness of Moody's and whether or not people really pay attention to them, if we get a slew of these downgrades and it drops, goes from AAA, now it's AA1, and if it keeps sliding down, I think there's about 21 levels that they could actually use. It's like having an alphabet of numbers, right? But, the weaker that they rate the U.S. dollar, the more problematic it becomes for the government to continue to sell debt. And unfortunately, we're in an environment where we need to sell a lot of debt because we are just blowing through money at an incredible pace. And what the concern is that the rates that we pay on our debt would have to go up in order to attract more buyers if we downgrade. And that's problematic because we're in an economy right now that's teeter-tottering on potentially a stagflation or a recession. So the tendency would be the Fed might want to lower rates to help the economy. If they have to raise them in order to attract buyers to our debt, we're going against the grain of what we want to do economically. And of course, a weaker US dollar does mean higher gold prices. So if we translate this through, what we can expect is not only less buying power in the US fiat dollar, but a more expensive ounce of gold. So I think it would benefit investors now. If this is going to be a continued trend of downgrades and a weakness in the dollar, it's also a great time to be buying gold and silver.
No doubt. And see, and the thing is that now, everybody is still whining about the tariffs. JP Morgan's CEO, of course, Diamond, says the markets are too complacent on tariffs and expects the S&P 500 earnings growth to collapse over time because of the tariffs. And again, I keep saying the only reason that Trump is doing this, he's trying to do it to bring people to the negotiating table to straighten out the trade deficits. It's got nothing to do with mom and pop starting up a business in a small market and promoting themselves and making money for what money is worth. I mean, you think pretty soon we're going to start taking gold and silver coins as a medium of exchange?
Wouldn't that be a nice option?
Oh, it would be.
Yeah, if I can't spend paper money and nobody wants to accept it, I need an alternative. And a lot of people do buy silver coins, pre-65 dimes and quarters, $half, specifically for that purpose. If we get to that inevitable point, they wanted to have something to be able to conduct commerce with. Because, let's say, for example, you're a store owner, and we've really gotten to the point where you're scratching your head saying, Fred, I don't know if I want to take those paper notes you want to pay me with for my food. I think I'd rather have some real alternative. And if we can conduct commerce with, there you go, gold and silver, we can level the playing field. Plus, there'll be a sustained value in that money, which means that somebody working hard to earn that dollar today could put it away for years, pull it out later, spend it, and it would not have deteriorated in value. Because that, unfortunately, is the gimmick with paper money. People look at a $100 bill from '60 and they look at a $100 bill in 2025. The physical bills have changed somewhat in style, but effectively it's the same note. But the way that they operate in terms of what you get for them are so far apart that they're almost unrecognizable. And this problem is going to get perpetually worse because when the government runs up deficits and debts and it can't bring in enough money, it has to print that gap, either by selling more treasury bonds or simply literally printing more money, which will weaken the value of currency for people. And this trend is starting to accelerate to the point where, again, whether we take it as at face value or not, the credit rating agencies are starting to say, we have a problem with this. We're looking at the fundamentals and we don't like what we see. We are concerned that the US dollar is going to be losing value if this trend continues. And Congress can't seem to stop spending money it doesn't have. And if we're at a point now where interest payments on the national debt have exceeded what we spend as a country on the Department of Defense, do we realize how insane that is? I mean, that's just a disaster waiting to happen.
You see, and I like to take $100 bills, when you go grocery shopping and you hand it to the clerk. What's the first thing the clerk does? Holds it up and looks through it to see if the strip is there. And I go, yeah, there he is. And she's like, what? I go, Satan, he's right there. He's in there. Turn it over. His eyeballs looking at it. See, right on top of the pyramid there. The all-seeing eye. Do you see that? And you get everybody in line just freaking out, looking in their wallets. The thing is we always, there was this fad a long time ago with the old 20s and 100s where they would actually take tweezers and try and pull the strip out.
Pull the strips out, sure.
Yeah, because they claim that, they could tell how much money you got on you. Fred, what do you know about that?
Well, when we started adding security methods to the U.S. dollar, it was because there were foreign printing supernotes.
Like Russia?
Yeah, Russia and out of the Middle East. So there were foreign presses that had been retained that were being utilized. And they were printing dollars that were so accurate and so good, they were calling them supernotes because they were very difficult to distinguish from an actual note printed by the U.S. Treasury. They had the Taglio printing presses, which are what the U.S. Mint uses to produce its money, and they were so accurate. So they started to incorporate what they call both overt and covert methods of trying to protect the dollar. And that included those little strips and a whole bunch of things they don't tell us about, the shifting ink and things like if you take your bills these days and hold them up to the light and kind of alter them, left and right a little bit, you can actually see the color of the ink shift a little bit. And those were some of the incorporated methods to try to produce money that couldn't be as easily duplicated. So we have a flaw in the system in that, we can duplicate paper money. That's one of the things about gold and silver coins I always like. It's a hell of a lot harder to counterfeit an old silver dollar than it is to counterfeit a paper note. And of course, I love the idea that they can't make any more silver dollars. They stopped minting these things in 1935. And they continue to make silver coins to 1964, the dimes, quarters, and halves, but then they ended the production of those. So that was the last of what you referred to as constitutional money that we've had available to us as a nation. And I'm finding that the more that we end up relying on this paper system and watching the government overspend, which means they just keep printing to fill the gaps, the wider that difference between that paper note and that silver dime and quarter will become, the more valuable it is to those that are holding the silver dimes and quarters. So for those that are coming up to retirement or planning on it the next few years, please don't count on paper money to be your resource for spending in the future, because unlike generations ago, we can't retain value in paper money anymore because we have a fiat system and we're blowing through more money than we're bringing in, which causes us to create more capital, diluting the current value of those existing dollars already in circulation.
So even though the budget bill that Congress just said no to, and it looks like a new version is going to pass, how much is that going to add? Are we looking at $4 trillion in the next whatever?
It's massive, and this is happening in a relatively strong economy. So if we're running up budget deficits when the economy is actually relatively strong, what's going to happen if we get a weak economy? That's going to create a huge problem. I would hate to be in the Fed's position if the economy slows down and we're still blowing through money we don't have, because then their incentive would be to lower interest rates to try to help out. But if we're fighting a problem of trying to retain interest in government debt, it has to pay interest to support the amount of risk. And the more that the dollar gets weakened or the more downgrades these credit agencies apply, the more that people perceive the dollar as risky. The more risky your currency, the more you're going to demand that it pays an interest. Like if I told you that you could invest in Argentinian dollars, pesos, or Chinese yuan, what you would look at is their economic environment. And the weaker the economy of that country looked, the more you would say, well, I'll buy it, but certainly not at low interest. I want something to at least compensate me for the potential risk. And if we're getting to a point where people are starting to assess the risk in owning US dollars, we have a problem, because it's kind of like taking the veil back and we're exposing the man behind the curtain. We don't want to do that. We want to keep everybody distracted. And they're going to have to come up with something, because if people really start paying attention, they're not going to like what they see.
Well, I know, and it's like Never Never Land. It's like, okay, just close your eyes and click your heels together 3 times and say there's no place like home. Yeah, Toto, we're not in Kansas anymore. All right, so the bigger picture here, we've got countries like Australia that are now going to start imposing an unrealized gain tax, which is economic suicide. I mean, seriously, it's a slow motion train wreck. This is in Australia now, folks. Thank God we're not doing it here. And if it starts, you need to just, wipe it out and bombard your congressmen. Don't let them do it. This is a move to tax unrealized capital gains. And it's equal parts. It's just like mathematically insane, cut and dry authoritarian. And starting in July, the Albanese government is set to debut its masterstroke, taxing imaginary money. And whatever you have, if they can tap into it, which is why I don't like blockchain, I don't like Coinbase, I don't like any of these, because somebody externally is going to be able to get in and read it. Is that what you're perceiving right now? They're going to tax you on money you haven't even spent or earned yet.
Right.
I mean, this is just nuts. This is Australia, of course.
Well, would you say this is in response to tariff issues? The fact that we're trying to impose tariffs, is this their kickback? Again, when we weaponize the US dollar, I think we create more problems than we resolve. So, it's one thing politically to try to use your dollar, your currency within your country to affect change around the world, but you have to face the potential problem of, forgive me, but pissing off your friends and neighbors. And if we start aggravating even our trading partners that are already aligned with us, we're just lining up for a potential problem. We're handing everybody the dodgeball and just standing there saying, well, we'll give you a dodgeball too. And then we're going to get you mad at us. So what are you going to do? You're going to throw the damn thing at my head. Why? Because I'm poking the bear. And I think this is going to backfire on us more than it's going to help. A lot of economists have mathed this out. They're way smarter than I am. And none of them have been able to come up with a way to say these tariffs in the end are really going to benefit Americans, because the amount of jobs we might create by changing the tariff ratios is not going to compensate for the number of jobs we're going to lose because of the higher taxes the tariffs are going to impose upon all of these manufacturers. And I think in the end, the customer, the consumer, us, are the losers in this game, because one way or the other, you and I are going to pay a lot more for goods. I mean, I am terrified every time I go to buy things now. The first question in the back of my head is this particular product influenced now in price because of a tariff? If I'm thinking about buying a new car, am I going to be paying $20,000 more now because of a tariff? If I'm going to buy vegetables, am I now paying more because we're imposing tariffs on the countries that import their vegetables? And how far will this go? How many jobs will it take away from Americans before we begin to realize this isn't really working? And I think you said it at the outset that Trump is using this as a tool to renegotiate the trade agreements. And I get that. And I think more power to him in that regard. But there's a cost if this backfires, or the extent to which he's doing it. When it's not 5% tariffs, but, for China, it's 130% tariff. They're insane numbers. Yeah. And of course, China, their economy is already slowing down. So they are our biggest, exporter to us of all these goods and services, the cheap goods. If their economy slows down, they have a problem. And that's going to translate into our economy as well. So I don't like anything that's going on right now. The only thing I feel comfortable with is physical gold and silver, because I keep thinking that when all the smoke clears, one thing's going to be true. The paper money value will have been deteriorated. It's only a question of how much. And the price of gold and silver will have been forced higher by virtue of this weaker paper currency. I think that's the trend we ought to anticipate going forward.
And see, this is why we have U.S. Coin Capital as a sponsor of the show, folks, because we know where our economy is headed, and Fred and his crew know exactly what's going on. And, I mean, they're watching what's happening, like, for example, when they start selling off treasuries. And, folks, what Fred has done on the show here right now is explain to you the difference between intrinsic value, which is your gold and silver coins, and extrinsic value, which is what we the people give full faith and credit to, as far as the dollar bill that we supposedly pass debt notes from us to the cashier when we go to the grocery store, or go to McDonald's, or whatever the case may be. Every time we hand cash over, we're passing our debt to the next guy, this is typical of Congress kicking the can down the road. The more money they, conjure up out of nowhere. I mean, it's bad enough that we've got the banks, and we've allowed the banks to create credit. When you get a mortgage, they just pull it out of their butt, create it out of thin air, and sign a contract, and you're the maker of the note. And what that works as a debt instrument against you. It works as an equity instrument in favor of the banks.
That's right. And then they get to borrow against that note 9 times over, right?
Yeah.
So they magnify the amount of money that they originally loaned, which, like you said, comes out of absolutely nowhere. If I take out a $500,000 mortgage today, the bank did not have a $500,000 sitting in an account that it now gives to me for me to write the check to buy the home. That money is created, and that note I signed becomes a legal obligation that can be utilized as an asset and can be borrowed against at 90% of its face value. And subsequently, that 90% note can also be borrowed against until they end up multiplying the original number about tenfold. And this is how monetary expansion occurs within our U.S. economy, besides when the Fed prints money directly. So it's a very interesting system. And, if we're going to qualify the problem, I think this is going to be difficult in the real estate market, because the weaker we have in this economic environment, the more likely it is for the rates to go up. And I think it's going to become difficult for people to continue to manage to own homes. If we're losing value in the dollar, they're earning less in terms of buying power, and the cost of borrowing the money is going to go up. So this could seriously affect the real estate market around the country. It's been problematic to begin with, and obviously real estate is local, but all these things do filter through. And it all stems from the fact that we're able to just create money out of thin air. If we could not do that legally, and we were obligated to any sort of standard, even if it weren't gold and silver, it was something, we would have more fundamental strength in the retained value of money over time, which is a horrible graph to look at. The purchasing power of money over time as a graph is an ugly, ugly looking thing.
No doubt. Folks, this is one of the reasons why we have Fred on the show, because he's paying attention to this. The guy, he majored in economics. Me, I just took one course, okay? And I had a Korean counselor, a Korean PhD, Kyung Mal Kim, Dr. Kim. I couldn't even understand the guy half the time when he's sitting there talking about paperbacks. And I'm going, paperbacks? What's this guy talking about? People are looking at me going, don't you understand what he's saying? I'm going, I don't know. He's talking about paperbacks. Or, no, paper bags. I go, paper bags? What does that have to do with anything? He's talking about paper bags full of money. And I'm going, oh my God, we are so off on the wrong foot here. But, the thing is that it doesn't really matter. What Fred is talking about is taking and diversifying your portfolio so you're not hiding money under the mattress. It's a whole lot better if you're going to take that mattress money and call Fred at 1-800-878-2646 and buy yourself a big chunk of gold and silver and get yourself a floor safe or something to store it in, because you just don't know what these people, especially the Fed. We told you about what Thomas Jefferson said about you let the Fed come in, and they did in 1913. They control the country first by inflation, then by deflation. And you get this teeter-totter, and this is exactly, you see what the manipulation in the markets is happening right now, all because we the people are putting our faith in fiat currency, right, Fred?
Yeah, exactly. And, I kind of look at this and I say to myself, there's a parallel here, although I'll separate the two. But look at the Bitcoins and the cryptocurrencies. So what you have is a group of like-minded people who've decided, because there's scarcity in this item, that translates to the fact that it has value. So how utilized is it, or how easy is it to be utilized? Well, you can certainly transfer them quickly, but this sort of like psychology where we all get together and assign value to something because of scarcity troubles me. But we're effectively doing the same thing with US dollars. We're all accepting this notion that they do have value. And if I had to pay you $500 and I gave you five $100 bills, I'm sure, Dave, you're going to take them because, you're going to use them with the next guy who also accepts the premise. But let me tell you something, that psychology is subject to a serious change because fundamentally there's nothing underneath that's really supporting that value. And if it's all psychology and the credit rating agencies and others start aligning and starting questioning this or the relative value therein, that is going to translate into a big problem going forward. I can imagine generations from now looking back at us and laughing at the idea of how we tried to utilize an economy based on paper money we were simply printing out of thin air that had no fundamental backing to it. Again, the acceptance of the good faith and credit clause makes a lot of sense when you have a government that operates properly or operates in a profit or operates with minimal losses each year. But when you have a government that's bleeding $1 trillion every 100 days and printing its way out of that problem to secure itself for the future, we are relying on a government problem that is not going to go away and in our lifetime could affect us so much. I would rather see people stash pile, bags of silver coins under their mattress than, piles of paper money that they could have done like in the 1950s. You could have got away with that because the purchasing power of money wasn't deteriorating so fast. You could earn $1 in 1950 and put it away to 1965 and you barely saw a change in value. But between the 1960s and 1970s, we started to see big changes. The 70s to the 80s was an inflation explosion that woke people up to how rapidly money could deteriorate in value. So I pose this question to people listening to this. What determines the value of the current paper money you're holding? And how do you think that's going to look let's say 5 years from now, 10 years from now, when instead of 36 trillion, we're looking at a $50 trillion national debt, and we're adding, $1.5 trillion to it every 100 days.
All we're doing is, we're kicking
interest payments. I mean, how is it going to be? And is that really where you want to, provide for your family and your future in that form of money, knowing full well that the likelihood of it retaining value is as close to zero as you can get mathematically?
Yeah, you got to love that. Fred Dashevsky, thanks so much. USCoinCapital.com. Call him, 800-878-2646. Alex Newman joins us tomorrow on the Krieger Files. God bless you. God bless the United States of America.